Okay, welcome to Swing Trading with Cycles channel. This is our uranium update, and unfortunately, it's not looking very positive, and that's the general trend for the broader market, right? So it's not surprising. Definitely take a look at the broader market update, link in the description. That is going to tell you the direction that most risk assets are going. So we're going to use CCJ as our proxy. We'll also look at some other names, but just know this trend is about the same for everything. So it doesn't matter what the name is, they're going mostly in the same direction, right? So in this case, we had this low on day 15, and again, you could, at this point, it does look like, you could just call this 23 plus 15, so really a 38-day cycle. So this was your daily cycle low, and we're maybe getting a daily cycle high here on day 9, right? So again, this is where the cycle count doesn't matter as much as understanding, are we in a downtrend? The answer is yes, right? That's pretty clear, right? We did that, that. And now, again, I'm taking liberties here. I'm not drawing every single move. And then we did this. So we could even do something like that before something like that, right? So caution here, caution. So this would be day 9, 10, 11, 12, day 13. And so that's interesting because the broader market is on day 14. So very similar, except the broader market just made a higher high a day or two ago, like at the S&P, I should say, to be specific. Whereas this did not. So that's just your sign of weakness. Most importantly, the thing that's a blinking red light is we have made a low below last week's low. So last week's range, and we talked about this in the previous video, we always talk about this. That's how these things work. Price breaks a range, and that's when we start to trend. And so we were within the range of last week, so that's a high of 25.94 and a low of 23.15. We're now here at 23.08. It's November 2nd, by the way. That's where we close after it. So we've had the Fed announcement, the FOMC announcement, 75 basis point raise. And now we have the potential of a swing high forming, right? That makes this another swing high. That means the target would be below this low, right? To continue this series of lower lows. And maybe we have a destiny at the 200-week moving average. I'm not saying we are definitely going to get there. It's something to just be aware of. And not necessarily the moving average itself, but just the idea that a downtrend can persist. Most importantly, we talked about this monthly candle opening as an inside candle, and that's exactly what it did, right? Again, this is a very young monthly candle. It's very new. It's only 2 days of price trading action. But the low from last month is $21. That's $2 below here. It's about 10% downside. That's important to know about. The high is all the way up at 28. Do we think we're going to get anywhere near 28 anytime soon? I don't think so, right? So more likely that we visit 21 than that we visit 28. Between those two numbers, we're just kind of in limbo, right? We're still inside the range of October. That's important to understand. So, again, not looking great here. Let's look at the smattering of other names, right? I want to make sure we get to YCA because people have been asking about that. Yellow cake, right? So this trades on the London Stock Exchange. This is a double top of this until we break out above it, right? Like that's step one. This is your daily chart, by the way, right? Like that's very clear. And most importantly, this whole structure is a lower high to this. That's not good. What you do have going in your favor is this consolidation here, this potential breakout. But again, if we're having a risk asset meltdown, and I think that's what we're having, again, take a look at the other updates. We'll also look at the Dixie. That's a big component of a lot of risk assets moves. I suspect this is probably going lower. To the question of how you trade this, though, like I would look at the daily time frame, and clearly we need to stay above this cluster of lows. So call it the 411, 410 area. And this is where your judgment call comes in, right? You could set a stop anywhere from like 415 to like 405, 400 even, right? Like your risk tolerance. Because like this whole move is being held up by this candle right here. You can see that, right? I hope that's clear to you. If you've been watching this channel, you're starting to understand how things kind of interplay, like, right, like this whole candle is holding up this whole thing, and this doesn't look super healthy, honestly. So you can imagine a break below that candle takes us to 393. So it all depends on your sort of risk profile. But like once we break below that, then you're gonna probably visit like the 370 area and maybe even like the 340s. And again, we may have a bigger move down coming in more, like if we have the bigger move down coming in the S&P, which is what I suspect, which is what the price action is telling us. We'll know more when we close this week, of course. But you would think that uranium is going to take a bath as well. Let's also look at elevate uranium. Oh, actually, let's just look at, yeah, we talked about this. The previous tweet I put out, the monthly was green. It was. Now it's red, and it's also inside. But it does give you clear levels, right? And this is the same level from that chart, right? It's like breakout above 447, and then we might, you know, retest these prior highs, resume our move low higher. But if you think about the idea that we're moving into a long-term cycle low, this is your big sort of bell ringing that this is your higher, like your cycle high. We could just kind of consolidate here. We don't have to like drop so violently. We could just kind of consolidate for a little bit until we kind of things kind of catch up. Now, that candle I talked about that was holding everything up, this is another example of it, right? Like this August candle is kind of holding up this whole rally, which is looking like a bearish rising wedge if you kind of think about it. So that's yellow cake. Let's look at elevate uranium. We'll start with a monthly chart. This doesn't look great. This doesn't look good. This looks. I'll be more specific. This looks bad. Let's just draw the swing high so that we're clear. That's a swing high. That's a swing high, and now this is about to become a swing high. That is literally the definition of lower lows and lower highs. These are just a series of lower highs. That's not good. The level you really want to like be mindful of is above 42 and a half. We break below that and we're opening up 34 cents. So that's another 25% and easily down into the, mid 20-cent range. So you want to be careful there for sure. That's your monthly chart. And they're all doing the same thing. Like we looked at CCJ before. It's a swing high on the weekly, right? Just to be more specific. That's a swing high. But guess what? That was also a swing high. And guess what? That was a swing high. We drew those swing highs on the monthly. It makes sense. If there are swing highs on a monthly chart, that means by definition there are swing highs on the weekly. That's how it works. And so this is just kind of uncovering those, not looking great. Yet at the same time, this whole thing is kind of a bull. This whole thing is kind of a bull flag, or it is a bull flag. Just a question of, is it a bull flag that fails, or is it one that resolves higher? If we look at UUU energy fuels, again, all the same thing: swing high, swing high, swing high. Very similar pattern to all of them, really. URA, the ETF, just making a smidge lower for the weekly. URNM. Yep, URNM further below that low from last week. So important signals are flashing to us like a blinking red light. There's no reason why you have to be married to an asset class. Uranium is getting pulled down with everything else. That's not surprising. Definitely take a look at the other updates around other asset classes. There's always another thing to trade. Thanks for watching.